Hey there, I'm Jeremy Grobeck coming to you from FirstClassMortgageService.com. Construction lending. Construction lending. You know, I was thinking of not even making a video on this, but construction lending is really where a big extent of my background is, and I couldn't help myself but to make a video on it because I at least wanted to educate you. Now, the problem with construction loans is that with the falling of the market or collapse of the market or tanking of the market, whatever you want to call it, when everything went to hell, construction lending went with it. And there's very few lenders out there doing construction loans, let alone construction loans that have low down payment options. And that's what a lot of people run into, is they'd love to take out a construction loan, but don't have the down payment necessary. The reason the construction market's kind of fallen apart is because there were lenders out there that basically got stuck holding the bag, and they had a house under construction and it fell apart. You know, it's halfway done, it falls apart, the deal falls apart because the builder goes out of business, the lender's stuck with this half-built house, or the homeowner loses their job and the lender's stuck with a house that's half-built, they got to sell. So there was a lot of issues there. But the gist of construction loans, because you will still find them out there, and you know, we don't have a very aggressive program for construction lending. I'll be completely honest with you. We do have a program that we can look at on a case-by-case basis for individuals. Again, it's not very aggressive, so I'm just going to be real upfront with you. But here's how it works, okay? So you want to build a house. The general process is as follows. Number one, call me, get pre-approved. Okay, so we got that out of the way. Next thing is to go talk to your builder. They're going to work up with you a price for the house. Now, that can be quite the process in and of itself, but let's just assume that builder takes you through the process. You get the price to build the house. Now, your next step is you either already own your land that you want to put your house on, or you need to purchase land. So we get the land figured out. We'll get that price. All right. Then we're going to process the loan through. So with a construction loan, a true construction loan, everything is done up front. So I'm not talking about your subdivision builder that has you sign a contract, builds the house on their lines of credit, and then you do an end loan to purchase that home. That's not a construction loan. Now, you may be building, but that's not a construction loan. The way a construction loan works is we get all these numbers, we process the loan. So we do the appraisal, title work, and the appraisal is done based on an as-is, or as completed, I should say. So the appraiser takes the prints and contract and specs and everything out to the land. They say, all right, if this house were built on this piece of property, it would be worth, X amount of dollars. And so that's how the appraisal is done. Now, at the very end, once the house is done, we send the appraiser back out to verify what we said was going to be done there was what was actually done. Now, we're not going to tell the appraiser that you're going to build a 3,000 square foot house and then you turn around and build a 1,000 square foot house. So that's the double check. But everything is done up front. You'll close on the loan. At that closing, if there's anything owed for the land, that's paid off. And a lot of times at closing, the builder will take an initial draw to help get the wheels turning. So we close, builder takes a draw maybe for 10%, a pre-draw on it, and construction started. First, thing then that's going to happen is the builder's going to take out a series of draws as they build the house. So, for example, and this can be structured in a number of different ways, but for example, the builder's going to say, okay, well, I want to draw after the foundation's in. So they put the foundation in, somebody goes out there and inspects it, and the builder's paid out on that foundation. Maybe that's 20%. Then maybe the roof gets put on. Another draw is taken out. The drywall's up. Another draw is taken out. And then maybe a final draw after everything's all done and verified that everything's completed. At the end, sometimes things are updated. Sometimes they aren't, depending on if it was a one-time or two-time closed construction loan. But at the end, basically a little bit more processing is done on the lending side of it. And that final draw is paid out. And the loan converts over from this construction loan to your permanent mortgage. And so that's the gist of it. Again, every builder works a little differently, every lender works a little differently, and everybody's case seems to be unique when it comes to construction lending. That's the basics of how the process works. To learn more, just give me a call. I'm Jeremy Grobeck, FirstClassMortgageService.com.